Okay, well, wow. There's four at least, five, six, seven. Okay. How's it going? Welcome to today's coaching. We are gonna get started, okay? First, I do have one little question that I was asked about. 12:30 p.m. in Alaska. It is 11:30 p.m. So just before midnight in Jerusalem, in Israel. So I don't know. I think you have better timing there, better time zone right now. Okay, let's get started. So first, the market, the pullback is so far has been bearish. If we were gonna be bullish, we should have held the 20 and the 200 on the hourly. Should have held on to, so stopped there and not continued lower. So the pullback so far is bearish, but the whole move up was sloppy. I mean, the move up wasn't sloppy, it was clean, but the whole chart is sloppy. We have a declining 20, and tomorrow we have FOMC, so it could be a decisive day if we, I don't know. We're too far above that support area to reach it tomorrow. I would be surprised if we did. But if we take out the red bar, that might signal, follow through on the weekly. So kind of interesting. We'll find out tomorrow what ends up happening. Tomorrow is the rate decision, isn't it? Or is it, what's tomorrow? Tomorrow is the date, March 7th. No, so it's just the minutes. Because I think the rate decision is every 6 weeks, and the third Wednesday of the month, every 6 weeks, I believe. So tomorrow is the minutes, right? Because it's the first week of the month. Hey, Edgar. Anyways, we'll see how things play out. We have a weekly buy setup and a daily sell setup. Weekly buy setup. Okay, got it, Rudy, got it. So weekly buy setup, daily sell setup. Gonna be interesting which way the market goes. But we are, I think, at a critical point on the chart. Okay, so I think we are kind of at a, important part on the chart. Okay. I thought today was good, like in terms of setups. We had plenty of bullish setups, and I took none of them. But because I made the little bit of money on Rivian initially, and I became aware of it, and I didn't want to give it back. And so I got gun shy, so to speak. It's why I don't normally like to pay attention to the P&L at all when I'm up money. I don't even like to look at it, because then it might influence my decision making, and I feel like today it cost me money because I passed on all the longs and they just kept working one after the other. I remember the WW, I mentioned it. I remember the TDUP buy setup. I'm not sure I would have done it, but boy did it work. It was amazing, the move up there. So I don't know. So I feel like today could have been a really nice day. This is a very, very nice pattern, ZVRA. I was busy with Rivian, and then I did get it at the end of the day, but it was, too little, too late. And I also got filled with very little as well. But that was kind of a nice pattern right there, short. Pretty nice towards the end of the day. So I feel like, and Rivian was pretty good because the last setup on Rivian was only 10 cents a stop. Not even 10, but I think my call was 10 cents. The stop. So short under 15, really stop over 07, or, safer would have been over 09. So 10 cent stop, and it dropped 40. It dropped, you should have made about 2.5 hours, basically. Of course, if you held it until the very end of the day, or you got out at the bottom, that was 4 hours, technically speaking. If Powell appears before House Committee tomorrow, we'll probably reiterate. Right, that's what I was thinking. He already talked today. So what is going? What is he gonna do? What is he gonna say that's new? That's gonna be new and different than what he already said today. So I don't know. But you know what? You never know how the market might react to whatever Powell says. Especially if he, if there's Q&A and he says something off the cuff that's, that catches people by the market by surprise, so to speak. But I doubt it. That's kind of unexpected, to tell you the truth. Okay, what do I mean by a buy setup? What is your buy setup? A buy setup is when you have a pullback, when you have an uptrending stock, and it pulls back usually to the rising 20. So that's what a buy setup is. Okay, a pullback pattern to the rising 20. Now, a sell setup is the opposite, is when you have a downtrend and you have a counter rally towards the downtrend, the declining 20 against the trend. So it gives you a chance to short it. A buy setup gives you a chance to buy it. You see what I mean? It's like when something that you're looking to buy goes on discount. You're looking to buy it. You were about to buy it for $1,000, and now it's selling at $750, Christmas discount or whatever. So it gives you the chance to buy it, gives you an entry, and the exact pattern. I've done multiple videos on it, so to know, to figure out the exact pattern. But basically, the first criteria is the uptrend. So you want to have a stock that's uptrending. So now, what is an uptrending stock? How do you know it's uptrending? So there's specific definitions for everything. Like, this is, trading is not, people discount it as, it's just up and down. There's not much to it. There is. So you have to know, the definition of an uptrend and what an uptrend looks like. But more, the simplest way I can say it is, if you put a 20 period moving average on the chart, it should be going from the bottom left corner of the chart to the upper right corner, and price should be above it. Okay, if price is above it, and then all of it is above the 200 MA, so that's the 200 MA. Okay, so those are the most bullish uptrends. Price is above the 20, and that's the 20. Then you have yourself an uptrend. And so we look for stocks that are really nice, uptrending, and then we look for 3 or more bar pullback. So red bar, red bar, red bar to the 20. In this case, run out of room. So let's pretend the first red bar formed here. So then the buy setup, then you start stocking it to play long. And the play triggers, the buy setup pattern triggers the moment the stock takes out the last bar's high. So the entry would be just a penny above that last red bar's high. Stop goes under the pivot, under the red bar's low. And then target is usually the prior pivot high. So if the prior pivot high was up here, then that would be normally your target. Sometimes it can exceed the prior high. Here's an example. When the stock is really, really bullish, PTGX, that's a buy setup. So in this case, it put in 1, 2, 3, 4, 5, 6 red bars in a row. Long over this bar's high, stop under it, target right here, and it just kept going. It went up $2 more than the prior high. So sometimes if the stock is really bullish, or you think it should blow through the prior high, well, the best thing to do would be to manage it bar by bar. So you just bring your stop up every time the bar closes, and hopefully, and if you get a wide range bar, you can go to the smaller time frame and manage it and go bar by bar on the smaller time frame, or you're out here versus out there. So you see what I mean? So sometimes if it's a high momentum stock, it's nice to ride it up and let it exceed your target perhaps, and then let it trail you out bar by bar. What time frame? Any time. The concept applies to every time frame. It's just what it is you're trying to do. If you're trying to play swing overnight, you want to be looking at the daily chart. If you're trying to trade the open early in the morning, then the 1 or the 2 minute chart. If you're trying to trade the afternoon, usually the 15-minute chart. But some people like to trade the 10-minute chart. Some people love to trade the 30-minute chart. I trade neither. I trade the 1 and the 2 at the open, the 5-minute later in the morning after about 10:30, and then after 11:30 or so, I exclusively focus on the 15. Meaning I look for setups, buy setups, sell setups, breakouts, breakdowns, and other patterns that I trade. I look for those to form on the 15-minute chart, and I ignore usually all the other patterns on the smaller time frames. There are exceptions. Climactics are played on the 5-minute chart for the most part, no matter what time it is, what time of the day it is. And so, for climactic setups. But again, there's exceptions here and there. But mostly, small time frames for early in the day, larger time frames as the day progresses. And then we like to make sure there's multiple time frame alignment, so the stock looks good on multiple time frames. But the first step is really to find a stock that looks really good on the daily chart. Now we have to define what really good is. Really good according to the methodology that you trade. For me, I just focus on gapping stocks. So if the stock is gapping down, there are different types of gaps and different quality. But if it's gapping, that's gonna already make my watch list most of the time. So I focus on gaps. So if it's a gap down, most of the time I'm gonna look to short it, right? If it's a gap up, I'm gonna look to play it long. Except sometimes, like today, I didn't do any of the longs, and they all a lot of them shot up like crazy. SE, I don't know, DKS, so many I can't even recount. How many of them really popped, because it felt like so many stocks popped really hard today. SQSP, obviously the PTGX we were talking about, the TDUP we were talking about, WW, and the moves were just outsized, were really, really huge. There were some nice move downs, but I think I caught the best one today, which was the Rivian, because it had multiple setups. It had at least three setups. So check it out. On the 5-minute, which is the play that I took. Okay, so the first play that I did, a base breakdown on the 2 or a 1, 2, 3 on the 5. That was the first play that I took. And then I got out of half. I don't know where exactly in this bar, and then it started to base, and I noticed on the 15 it was doing a 1, 2, 3. So I tried to reload, but I didn't get filled all the shares that I had from the open. So that was the second play on it. And then the third play, now I tried to scalp it a little bit here and there. I actually lost money scalping it, as I should have, as I deserved to, because it was sideways. I should have waited a little bit for it to move. But at any rate, and this was the third real play. Again, I scalped it a little bit here, but I didn't make any money. And this was the third play. So 5-minute 1, 2, 3, or a 2-minute breakdown. That was the first play, which is what I called on the mic verbally. Didn't post it. That was it. Breakdown on the 2-minute, or just as I said, 5-minute 1, 2, 3. Then 15-minute 1, 2, 3. And then a base breakdown at the end of the day, especially after that shakeout. So where's the shakeout? Guys see it? The shakeout means, a pop against the current trend, which was down, that got sold. So there it is, an attempt to go higher right here, and it got, the green bar turned into a big topping tail bar. So people got caught, basically. And that led to the breakdown. There it is, on high volume. Look at the volume. That's like 2 million shares on that pop. So that gave us a place to put the stop above the shakeout. If we didn't have that shakeout, the stop really should have been there. should go there. But with the shakeout, you can always play short under it and then stop above it. We had two shakeouts actually. By 1, 2, 3, you mean a long green followed by a narrow candle that go short at the break of the second candle. No, go long at the break of the second candle. So here's a 1, 2, 3, bullish 1, 2, 3, breakout, wide range green bar, a small, hopefully red bar, but it doesn't have to be, at the top, and hopefully they both have the same high, so that you get kind of a double top, and then you go long on the break of the red. On the break of the highest point between bars 1 and 2. So above the green bar's high, I guess, was higher, and then stop goes right here under the red bar's low, or the second green bar is low, whichever is lower, because sometimes the third green bar ends up, starting here, let's just say, and so your stop shouldn't be under the red bar, it would have to be under the green bar. Okay, I do recommend taking Trading the Pristine Method class. You can take the home study version, because it teaches you all the stuff, teaches you the methodology. Okay, it's so much better to learn it that way, to take a class, a course, and learn the whole material that way, than to do it through piecemeal, like as you go, and through experience and through the room, because you'll pick up a lot of information every single day. You'll learn something new, and you'll learn, but it doesn't, we don't put it, it's a trading room, it's not an education room, so we don't like teach a whole class every day. We don't teach from A to Z, we just teach various things as they come up, various topics, answer various questions, talk about different setups, different plays, but we don't teach the whole system. That takes 2 days to teach in a class called the TPM class. Now, I don't want to sound like I'm trying to sell you anything, because I'm not. There's nothing in it for me, but it's just, I highly recommend it. All right, can you discuss how you enter trades, especially on stocks under 2? I don't have much experience trading those low price stocks. Specifically, do you anticipate and place the order below the breakout price for a long, or place the order above the breakout and risk missing? Are stops placed in advance? No problem, Edgar. Okay, so the question is, how do you enter? Do you wait for the stock to break out before, let's say you're looking to play a base breakout right here. Let me just use a different color. Let's say, or, a base breakdown like we did here. I 100% of the time anticipate, okay, if it is something I'm looking to scalp. If it is just a big old base breakout and I'm not looking to scalp it, and I'm not, then I don't have to anticipate. But if it is a scalp play, and if you're talking about a $2 stock, I'm probably going to be looking to anticipate. So the way I do it is I watch down level 2. Say the entry is above, so the entry is at, the post says, Rivian buy at 1462. So then I put it on level 2, and if the level 2 is not clear, I will wait for it to get to 4062. But if the level 2 is looking good, like I got a really strong bid here, okay, then, and the stock has momentum and all of that stuff, then I wait for the offer to weaken, and as soon as the offer is about to get to 62, I jump in. I don't wait for it to trigger. So I anticipate on scalp type plays by watching the level 2, and as soon as the offer is about to get taken out, I try to jump in early. Now, if it's not a scalp type trade and I'm just looking to do like an all day hold type of a trade, that has a big base, not a tight stop, not a super tight stop, then I don't anticipate. Okay, another time I do anticipate whether it is a scalp or not is when it's on an uptick. Stock goes on an uptick, becomes SSR, share sales restricted, when it is down 10% or more on any given day, and it stays on an uptick for another day. So Rivian dropped more than 10% today. Guess what? At the moment it hits 10%, it goes on an uptick, which means it'll be hard to get filled quickly, like right away. So you have to submit your order, and it might sit there for 30 seconds before it fills. Or I may, what I often do is I submit multiple orders to get one of them to fill, and then I cancel the ones that didn't fill. Okay, so when that's the case, I anticipate it just about 100% of the time, because if I wait for the stock to break under a base and it's on an uptick, guess what? I'm probably not going to get filled at all, because it'll just drop a lot before I get a fill. I don't use market orders. I always use limit orders. For entries. For exits, you can use a market order. Okay, so why don't I use market orders? Because a market order, I may, if I'm jumping in manually with a market order, what if it jumps? What if the stock pops and I get a bad fill? So with a limit order, I control the price I will get filled at. Sometimes I'll send the market order to buy it at 61, and it jumps and goes to 65, and I don't get a fill, or I get partial, because I use the limit order. If I use the market order, I would have gotten filled, maybe a little bit at 61 and then above. But I'm willing to take that risk of missing out versus not being in control of my fill, of the price where I get filled. So I always 100% of the time use limit orders when I'm getting into a stock. And when I'm getting out of the stock, sometimes I'll use limit order, sometimes I'll use a market order, but most of the time, honestly, I use a market order when I'm getting out of the stock. You know why? Because I just have a simple hotkey, the escape button, that sells at the market, exits at the market. Okay, but I don't, I think using a wide limit is also not too bad. Using a wide limit, meaning, let's say you want to sell Rivian, sell it on a limit order at $14. Now the idea is you're not looking to get filled at 14, but with a limit order, you're telling whoever is filling you, the market maker, it's a limit order. It's not, don't fill me at any price you want. There's a limit to what I'm where I'm willing to get filled, and you will, generally speaking, get a better fill. I told you about that story of Citadel calling Legend Securities, where I used to trade a long time ago, because I was a very active trader at that time, or that year, or whatever. And they told him that they were gonna pull the route unless I traded using market orders rather than limit orders. If they truly filled me at the NBBO, the National Best Bid Best Offer, then it shouldn't matter whether I'm using limit or market, right? But that already told me they were screwing around with my orders. They were, doing something. That's why they wanted me to use market orders. And I truly considered filing a complaint with the SEC, but I figured it would most likely be just a waste of my time. And then if it did result in anything, it would only result in me losing my route, my favorite route, CTDL, which was commission free and whatever. So I decided it's a lose for me. Not gonna gain out of it even though it's the right thing, would have been the right thing to do. But I decided, I'm probably not gonna gain anything, and I have everything to lose. If that complaint led to anything at all, it would just lead to me losing the route. Do you leave the order in if you don't get filled for tracement fill? No, I usually don't. Because if a stock is breaking out and it pops, and if it comes right back down to that original entry, it's probably not a good sign. and you should probably consider yourself lucky you didn't get filled. Now, we're talking in abstract here. We're not talking about a specific example. So, but just generally speaking, I don't leave my orders in because of that reason, for that reason. Okay, because they typically it means if the stock comes right back down to the entry, it's typically not a good sign. MOC is technically a market order, but I understand that's for earnings plays. So MOC is a market order and is not a market order. So it's a market order in that you don't specify the price that you will get filled at. But it is a limit order in that you will only get filled at the closing price. So you see what I mean? So you could use an MOC limit order also. In TradeStation you can specify the limit, which means, let's say you want to buy 1,000 shares of Rivian MOC. It's not always called MOC, and on this platform it's called CLO, which is the same in TradeStation, closing. So on this one, if I submitted an order to buy Rivian 1,000 shares CLO, and I left the field over here blank, it means just fill me 1,000 shares at whatever the closing price is. If the stock happens to get some news and it popped to 15, to 20, whatever, I'm still gonna get filled at 20. But if I specify a limit, 15, it means, pretend this is MOC, but it's CLO. It's again called different things, different places. It means fill me at the closing price, but as long as it's at or better than $15. Does that make sense? So MOC is not really a limit or a market order. It's just, it's telling the broker, buy the stock at the closing price, whatever it is, at the closing price. So it's not really a limit or a market. It is what it is. It's an MOC order. Okay. Now you can do, like I said, an MOC plus a limit to make sure you get filled only, at a certain price or better. Question: for these fast scalps, how does speed of internet connection matter? The speed isn't as important. The speed is important in terms of like getting the charts to run smoothly, getting, you don't want to get any lag, like, the level 2, you don't want to see it freeze, and then next thing you see, oh, it's at 1480. What happened? Oh, because my internet is so slow. When the stock popped, the level 2 froze. It couldn't keep up. So the speed isn't so important. It's the latency that's important. The latency is, when you send an order, if you could have really fast, high-speed internet, but live 15,000, 10,000 miles away from Wall Street. And so by the time, even though your order goes live, goes on the internet right away, by the time it gets to the destination, that's the latency. So it's really nice to have as little latency as possible. If I look at, if I close out of this thing, what do you call it? Sterling, I want to show you my latency. So I have pretty high latency where I am right now because I'm very far away. And this is why a lot of the market makers have their servers and their computers that are running their HFTs on the exchange floor itself or right outside. You see what my latency is? It's pretty high, 100 plus. So when I'm in California, it's usually 60 or less, sometimes 40. So, I don't know, but so it's really nice to have low latency. That's what's really nice to have. In addition to fast, high-speed internet, obviously. But I think latency is the big thing. Let's see. No problem, Edgar. That's my job. Happy to help. Happy to answer any and all questions. Trader Kim, how do you find your gap ups, gap downs in pre-market? Can I use TC2000? Yes, you can. Now, to tell you the truth, I have TC2000. I have a subscription, but I've never used it for gaps. So I think I can. I have just the gold subscription because I only use it after the close or usually on the weekends, honestly, only. So once a week. But there is a way they do have a gap scanner. I don't know how to do it, but somebody told me once, I just forgot. So if I were to go to, I don't know, so can I just say gaps? What if I just said gaps? Nope. Okay. So let's say US stocks, and then let's add a scan. Select conditions. Is there a gap? No. Add condition. Choose condition. Let's see if they... Oh, there you go. Gappers. So there you go. So you can do... now, let's see. Gap up, gap down. So a formula value. So hold on. -1. So hold on. -1 times if the low is above H1, does that mean yesterday's high? I don't know. I'd have to look into it basically, but there is an easier way. Somebody showed me, like they came up. You can also, like if you have a TC2000 subscription, go to help and contact them and just say, I'd like to be able to scan for gaps. How do I do it? And then just email them support@tc2000.com. They respond within 24 hours. Or call them. Or do some Googling, or you go to YouTube. You know, I'm sure it's on there. But yes, you can. You can also just join a room like this room, and they will, I share the gaps list with you. You can use a scanner to find the gaps. That's usually the best way to do it, a scanner. There's many different ways. You can also, if you have TC2000, you can download the list of stocks with acceptable parameters, like acceptable volume, price, and download the entire list. And in the pre-market, just put it in a watch list like this, and it will in a watch list like this, and it will show you how much it is and sort it by percent change. And then the ones at the top, let's say we had, this is your whole universe of stocks. You sort it by percent change. Oh, these are the gap downs, and and at the bottom are going to be the gap ups. There's so many different ways to do it. It's just whatever you want, and whatever you're comfortable doing, like the amount of work. There's other like websites that have a list of the gaps, but Market Chameleon is, I think, the best one, but it's not a complete gaps list. Finviz, okay, I have a subscription to Finviz also, but I've never used it for finding gaps. I don't know how to do it, but apparently Finviz also. So again, it's just so many things, so many different ways to do it, and you can buy a scanner that has a pre-trade-ideas.com that has a built-in gap scan in it, but that costs money. It costs $110 per month. So Trade ID, you can try it out for free, I believe. There's also what is it? Scan Z, another scanner. That's pretty decent too. So different ways to do it. Best way is we give it to you we put it together for you for free in the morning, James and I. So don't need to waste your time, spend your time looking for gaps. Maybe spend that time preparing. Maybe spend that time learning something, or getting organized in the morning. So, and just use our gaps list. Yeah, I don't use TradeStation. I mean, GB, he's been out of he was he's out of the he was out of the room today. I don't know if he was in the room yesterday. I believe he was. GB uses TradeStation. That's what he uses, and you see his list every day. It's pretty darn good. He posts a list of the gap. I mean, 90% of the gaps that I have, that I end up with. So yeah, and he uses TradeStation, mostly TradeStation. So yeah, there's different, a lot of different platforms that have a gap scan. There's different ways to do it. There's different websites, different scanners, different, whatever you want. Okay, what else? Any other questions? I did get a quick email about somebody that's struggling to write a trading plan. And I've done a webinar on how to write a trading plan. In fact, I did the same webinar twice on how to write an effective trading plan. The key thing is, when you write a trading plan, is you already want to have an idea of what you're trying to accomplish, what you're trying to trade on a daily basis. If you don't have a clue, if you don't have a method, an approach to the market, to trading, and a daily routine, how are you going to be able to write a trading plan? You're not going to be able to. So you do have to learn a methodology, I think, before you can even begin to write a trading plan. But once you have some sort of an idea of what setups and what things you want to trade and what time frames, whether you're going to be a scalper, a day trader, a swing trader, whether you're going to play long and short or just one direction, and the open or later in the day, once you have a good idea of what it is you're trying to do or you want to do, then begin at once. Where should you start? Anywhere. I don't care. Just jump in and start writing the trading plan. Usually where I would start is, there's different sections to a trading plan, but the bulk of the trading plan is the section that addresses the strategies, the setups that you want to do, and it should have a description of each setup in bullet point format. This way you don't get lost in the description and the detail. Just very concise, very short sentences, and then spend a lot of time describing the patterns that you really are gonna focus on, and like what they look like, what the market should look like, what the stock should look like on multiple time frames. Then discuss various things like R to R, reward to risk, relative strength, market timing, as I said. Discuss how you're going to enter, how you're going to execute, how you're going to share size, like where you're going to put your stop, how you're going to manage the play. So that's where I would start personally. Then once you've done a decent job of describing the pattern in complete detail, then you can move on to other things, such as money and risk management. How much am I willing to lose on any play, any one play? How much am I willing to lose on any given day? How much am I willing to lose on any given week or month? And what happens when you reach certain levels? What if you're down what if you lose 3 times in a row at the open? Can you continue to trade? Even if you're usually, even if I can lose up to 6 times in a day, if I lose 3 times in a row, there's something wrong. I have to stop. So start to like this, just the trading plan is not a document to put on your wall, to frame and put up on a wall and show it off. It's something that's intimate. It's something that you're writing to help you, to guide you. So it's between you and yourself. It's like something intimate, something that should make sense. That's like, that speaks to you. Something that you treasure, that you totally love. But it shouldn't be something that you don't worry about it looking super neat and looking and sounding really sophisticated. And no, it can be just super simple, but again, something that makes perfect sense to you. Okay, so that's kind of. But the most important thing about writing trading plan is starting, because most people, learn the methodology. They do know what they're trying to do every day, but they just dread the idea of having to write a trading plan. Because when you write a trading plan, the reason why people dread it is, first, nobody likes to write stuff like this. I mean, I haven't met a single person that likes to write stuff like this. Okay. I remember in college, I hated writing papers. And so I would just always overwhelm myself by saying, how am I going to write a 6 or 12 page essay on a topic that I know nothing about, or that I know very little about? And I would just overwhelm myself with that thought for a whole week. And then when I started writing, I had a lot to say. So as long as, you get started. Doesn't matter what you start talking about, like what section you start writing about, or what format, or should you do it in Microsoft Word or PowerPoint, or it doesn't matter. Just begin anywhere. You do it on a piece of paper. I don't care. As long as you start somewhere, then you get the process rolling, and then you can get there. You can begin, you can hope to get somewhere if you start. But if you don't start, you'll never get anything done. Okay? When I wrote the trading plan, I thought I really, really know what I'm doing, like the patterns that I'm looking to do every day. Like, I knew them really well. But when I started to describe the pattern in detail, boy, I realized, wait a second, I had to keep going back to charts and examples and things that I thought were perfect examples of what I was trying to do. I had to keep going back to see, no, wait a second, is it better to have a base right here, or is it better to have a base up here, or is it better to, I had to keep going back, and that's, the going back and forth, and the figuring out the detail and writing, and putting it in writing was so instrumental in it cemented the knowledge. Because before that, I thought I knew, and I did have a good general idea, but until I started writing and describing in detail, there were so many different things that I really missed, that I really overlooked. But when I had to write it down, I couldn't just gloss over it. I couldn't just, I had to write it down. I had to figure it out. And so the process of writing the trading plan is very valuable. The actual product, when all said and done, is not so valuable. So the actual trading plan, when all said and done, is not as important. But the process that you go through mentally is very, very important. Okay, so highly recommend it. It's not something I enjoy doing, to tell you the truth. It's not something most people enjoy doing, but I think most people also avoid it, because when you write a trading plan that spells out exactly what you're supposed to do and what you're not supposed to do, what you're supposed to stay away from, then then you're held accountable. Then you can't just say, ah, well, I just wasn't lucky on this trade. I was really unlucky. No, you can't, because now it's written down exactly how what you're supposed to do and what you're supposed to stay away from. So with a trading plan, things get suddenly real. So you can't escape taking responsibility, which is, I think, what a lot of people try to do, is to avoid having to take responsibility for the bad results, for the bad trading, myself included. I am no better than you. The only thing that I'm better about is I've been there, done that, and I know. So I've seen myself. I caught myself a million times trying to avoid taking responsibility. I caught myself, doing all the mistakes that you guys that you make, that I tell you not to make. So I've made all these mistakes a million times already. I'm not proud of that, but I'm just telling you, I am no different than you. I am no better than you. Okay? It's like, what's the difference between a very experienced plumber and somebody who's starting out? What's the difference? The experience. That's it. But they could be totally same people. Same personality, same smarts, same way of thinking, same way of whatever. But the only difference is the experience. One plumber has done it all, has seen it all, and the other guy is just starting out. So I preach not from a stage, not from a pedestal. I preach from the same. I'm on the same level as you. That's all I'm trying to say here. Question, MK. I'm new here. Nice to meet you. Nice to meet you too. You often short, but do you call when to buy? I'm not confident at all in shorting. Yes, I do. I play short and long equally. I would say just about 50-50. And I do try and post my plays, but sometimes, especially at the open, when things are moving fast, I may not post right away. Or I may not post, period. I may just call it out verbally. Give you the exact numbers, but verbally. So yeah, I do play long. That was my biggest mistake today, as I just hesitated. I made $2,700 on Rivian at the open, on the initial two drops, and then I started to think, oh, wait a second, lately I haven't, like today I made 5K, okay, but is this my average? No, not lately. Lately it's like, if I end up with 2-3K, I'm thrilled. Recently, okay. But so I started when I got to 2,700 at the open. I mean, not exactly at the open, the first hour of the day or so, I became hesitant to risk that money. Okay, so I ended up passing on a lot of good longs, and that was the mistake that I made. Is I let the P&L influence my decision making, which I shouldn't do most of the time. But I know that right now it's difficult, and it's so easy to give back your money, to give back the profit. It's just so easy. Happens way too often. Has been for me lately. So so that's why you didn't see me play long today. Excuse me. I'm still not 100% in terms of my voice. Since I got COVID last weekend. Not this past weekend, but the weekend before. So it's been exactly 10 days. So I feel a lot better. But my voice, I'm having to really push myself to speak loud. Would you say moderators make most of their daily profit while on the mic or off the mic? Less distractions while off the mic? No, I think I make most of my money on the mic. I trade better when I'm on the mic. I'm less distracted when I'm on the mic. If I'm on the mic, I'm less inclined to reply to a text message that I let's just say that I got. If I'm on the mic, because it's hard. to be replying and then talking to you guys and trading. If I'm off the mic, I'm much more easily distracted. I may want to grab something to eat, or but if I'm on the mic, I'm not going to be eating on them. So I actually trade better while I'm on the mic. I don't know about James, but I think probably, when all said and done, probably doesn't make a huge difference. But for me, I mean, I really do think I trade better while I'm on the mic, personally. Can you review what you like to see from the daily chart when you are doing a day trade? A wonderful gap. It's a catalyst, basically. A stock that has a catalyst, such as, look at this. Remember I said this morning, what did I say about the best gap, right? Didn't I? Now, that was in the pre-market. Now, I didn't like that it ended up losing $1 and gapping into resistance. When I reviewed it at the open, it was gapping to 17.90 something, and I said, I really would love to see it take out 18 at the open. But why did I like it so much? Why did I like it? Ignore the fact that I ended up not trading it. But why did I like it? Because, okay, so let me ask you a question. Ignore what happened recently here, okay? I'm gonna get to it. On a scale of 1 to 10, especially given how weak the market has been, or, given the state of the market, I don't want to prompt you I don't want to put words in your mouth. But compared to the market and most other stocks, how bullish is this stock has been, PTGX, on a scale of 1 to 10? On a scale of 1 to 10, how bullish is it? Oh, it's exactly. It's very, very bullish. It's like a 10. Exactly. So check it out. What happened here? So what's going on with it? All of a sudden, the most recent move up fails to make a new high, right? It didn't make it. This high is lower than the prior high, and then it got down to the 20 MA. It tried to go higher, turned into a topping tail, and started to downtrend. It almost basically started to break the trend. So here you go. You got this super bullish stock that's starting to fail all of a sudden, and today's gap erased any and all doubts and said, I ain't failing. So it basically negated all that short-term weakness that we got, and then it showed its true colors, or its true face, which is this face. I mean, this bullishness. So it failed on the most recent bearishness, which is why I loved it, because it confirmed the long-term trend and trapped anybody that shorted it, and every single person that sold out. The sold out bulls, the people that sold out, would have probably wanted to get back in it today. So I really, really liked it. But that's not the only thing that was good. I mean, what were the things that I put on my favorites list today? There were a few. So I look for, I look for gaps most of the time, and I look for really good gaps. Now, what's a really good gap? Well, you have to know how to read gaps. So there's a whole class that we teach on gaps, and there's a couple of free YouTube videos that I've done on gaps. So it's not a short, not a small topic. There is an art to it and a science behind it. What constitutes a really good gap versus a mediocre gap. So there is a way to read gaps and pick out the favorites, and when I find things that I really like, those are the ones that I'm going to focus on. But it's not just the gap, it's the gap plus the intraday. So sometimes I have a really nice gap, and then the intraday is pure garbage, right? So sometimes the intraday doesn't, like the gap is, I thought it was going to be really bullish, and the intraday is just selling off in a downtrend. So I look for solid gaps on the daily chart and solid intraday patterns on the thumbnail charts. When I find both, then I start stocking to get in. Okay. I don't know if PTGX was earnings or not. JM, would you have been stopped out on the long prior to the breakout on PTGX or which one? Yeah, I mean, I would have gotten stopped out. Yeah, if I was in it on this one right here. And then my stop would be right there. So I'm pretty sure I would have gotten stopped out, which made it even all that much better. Because that's what I'm saying. You know, people that stopped out and then they wake up and see that, oh, they got shaken out. Guess what? They probably would want back in. Does that make sense? So these are called the sold out bulls. The bulls that were in it but got stopped out and now would want back in. If when they buy it, it helps the stock go up. But then also the ones that shorted it as it broke the uptrend, as it broke the base. They're going to look to cover it. Their covering is going to push it higher. And then I always like it when a stock was before above the 20, broke the 20, and then gaps back above the 20. So it ends up being basically a shakeout. So there's many different things that I like about it. But, but again, PTGX, every day we have something like the PTGX almost. So it's really nice to be able to read the gaps, to learn the language of gaps, and apply it to the pre-market gappers, basically. But even if you don't want to do that, that's okay too. Because I put together the gaps list, James and I tell you what my favorites are every day in the gaps list, right? I list out the favorites. And then not only that, on the mic at the open, we tell you which intraday charts we're looking to play. So, we try to really tell you exactly what to do, what we're doing, at least. Tesla. I played Tesla this morning at 10:08 a.m. around 186.80, and my target was 190.50. I know I should manage it well, but the more I stared at the screen, even saw a little drop, I exited 188. I know it should not be fear, but sometimes I can't help myself. Could you give me some advice? This happened to me when I had a big loss last year. Don't look at your screen. I mean, what can I say? Like, come up with a management policy in advance and stick with it. Just under no circumstances should you break it. If that is a recurring issue for you, where you say, I want to do this, and you end up staring at the screen and getting, you end up getting out too early or something. So come up with a management policy that you are not allowed at all to deviate from. And if you deviate from it once, you have to shut down and you cannot trade the rest of the day. Make the rule, make the punishment fit the crime. Make the punishment severe enough that you will think a million times before you mess up, you go against your management. But there's, if that approach doesn't work for you, then come up with a way that actually works for you. Come up with a way that works for you, based on your personality, based on, yourself. I don't. But just one way to do it would be to come up with a management policy that you apply to your trades that's not flexible at all. Irrespective of what the stock does, irrespective of what the market does. Okay? One such policy would be bar by bar on a certain time frame, on the 5 minute. And that you're not, once you get into the play, you're managing it bar by bar, regardless of what it does. And then maybe you start to realize, wait a second, what if it's at 90% to target? Do I really want to continue to manage it 5 minute bar by bar? Well, then you start to come up with an enhanced bar by bar trail method, management method. Maybe initially you start off 5 minute bar by bar, but at 50% to target, you switch to 2 minute. At 75% to target, you switch to 1 minute bar by bar. So I'm not saying, the management policy cannot be changed or modified or, adjusted to suit your trading. It can. What I am saying is, initially, to help you to help you stay disciplined, come up with a way that works for you. And one such way would be to come up with a rigid policy that's not flexible, and and if you break the rule, you shut down for the whole day. You can't even take another trade if you break the rule, or something severe like that. Or you donate $100, you're forced to donate $100 immediately, or something that you don't want to do unless to teach you a lesson, so to speak. I see a couple more questions here, so I'll answer them and we'll call it a day. PTGX has earnings tomorrow. Oh, okay. No, I'm sure there was some news on it on the PTGX. It wasn't like, oh, somebody knew it was gonna. So I bet you the earnings are out already. When you buy Tesla, you average in and out. Okay, yeah, whatever works for you. Yeah. All right, guys. Thanks so much for being here today. I hope you enjoyed the coaching, and I'll speak to you in the morning. Have a wonderful evening. I'll talk to you tomorrow morning. Take care.